Afternoon. I think we're just, if we start, then those who are drinking coffee will find their way here lest they miss something critical, because we have some very interesting panelists in order to share their knowledge and their experiences with you about the voluntary carbon market. So my name's Simon Davies, and I have a role as head of the Financial Services Committee at the Chamber of Commerce. I'm also one of the founders of Capricorn Capital, members of the Chamber of Commerce, and we've been very much involved this past week in Brazil Investment Week, to which many of you have been participating. And this is, for me, it's the end of a long and punishing week. But it's also, this is a subject particularly close to my heart and something that I'm particularly interested in. And also particularly enthused that I have on our panel people who I've known for some time and are experts in the voluntary carbon market. We're going to have a roundtable. I'm going to pose some questions. We're going to have a chat about those questions, and at the end, there'll be opportunities for you to pose some questions as well, and hopefully you will do. So let me introduce our panelists. Right at my side, Ciaran Kelly is the CEO of Go Balance. Earlier, there was mention about when the voluntary carbon credit market started in 2004. Ciaran, you've been in it since the beginning. You've been involved since 2007.
I'd say, yeah, pretty close to the beginning, just about 2 years before Copenhagen. What was that, 9?
COP 9 or 10.
9, I think, 9 or 10, probably about 2 years before that.
Way back, no, cool. So, but Ciaran, basically, Go Balance, they're a UK-based developer of high-quality carbon projects. And for over a decade, Ciaran has led the Tracara Araratema Red Plus project in Borba in Amazonas. So he's working in partnership with the municipality. He's very well, he knows Brazil very well. He's been going backwards and forwards for many years. Next to him is Alessandro Leite, who's the CEO and co-founder of NaturAll Carbon. Again, I've known Alessandro for a number of years. He's many years employed in senior global leadership positions with multinationals around the world, but he's now a founder of the Anglo-Brazilian company called NaturAll Carbon. They're a climate tech company headquartered here in London. They also have a subsidiary in Campinas. And Alessandro is flying backwards and forwards a lot. They're pioneering carbon credit project developments for regenerative and conservation agriculture in Brazil. And recently they issued their first regenerative agriculture carbon credit in the Americas, certified under VERS ALM methodology. And that's only the second issuance worldwide. So that's pretty cutting edge stuff that Alessandro is involved in. And at the end, we're joined by Henry Waite, over 12 years of experience in public and private capital markets at Barclays, but now focused particularly on sustainable finance structures. And he's applying his experiences as a co-founder of Kumo. And Kumo worked with banks, with lawyers and with insurance companies in order to build the data and financial infrastructure to enable institutional capital to participate in carbon markets. So he's one of these people who's involved in the assets, in providing funding against the assets so that you can develop carbon projects. So we've got a really great cross-section of the market, players in the market here. Our plan here, chaps, is just to have a conversation. So I'm going to kick it off by my first question, basically. What do you think is driving corporate demand for high quality voluntary carbon credits today? Is it compliance? Is it reputation? Or genuine sustainability commitments?
I think it's virtue signaling. Yeah. So not compliance yet.
Yeah.
The thing that I've seen recently, and I know one of the earlier speakers flagged that actually there's maybe some concerns around CORSIA demand in the next couple of years. I think the thing that we've seen recently from our side when we're talking to some of the funders in the space is that every big trading house is starting to look at buying credits, future credits in the CORSIA aligned market or Article 6 aligned market, which either they know something that we don't, or they realize that this might be a big market for the future. It's not necessarily, I think if you're a treasury manager today, most of the buying for carbon credits, other than your Microsoft, who take up like 70% of the buying market today, sits in the sustainability offices and not in the treasury in the treasury teams. But ultimately, it needs to sit with CFOs. It needs to sit with treasury teams. Otherwise, there's never going to be an increase in demand. And the only way that happens is, I think, if there is an absolute requirement for them to do so. Because otherwise, a treasurer is paid not to take risk. They don't get fired because they take risk and it pays off. They get fired not to take risk and to run a business in a sensible way. And so there's no reason for them to start investing in future credits when no one else is, when it is only likely to be a liability. So that, I think, is a big concern. So I think it's still virtue signaling as a long answer.
Cool. Okay, interesting.
I agree, but I see slightly the different angle.
Okay.
I think it's a combination of the three, and compliance for me is an important piece of that. Not right now. We don't see a lot of compliance, as you mentioned, that people are doing that because of the compliance. But the market today exists, the voluntary market today. We mentioned here that, I mean, it's the first time that we saw carbon market was 20 years ago. And at that time, the market collapsed and was dead. And in the last maybe 5-10 years, we are coming back with this market. And why is that? The reason behind that is because a lot of governments, is because the rules in the governments apply new markets for the compliance. So the compliance market was created, and it's been developing around the globe. And this is pushing the voluntary market to start building up. As Malek put today, the information that, I mean, 20%, 28% is the compliance market, in only 2% of this 28% or is voluntary. But the voluntary only exists because of that rule, government asking people, not asking, mandating people to do it. Secondly, is about the reputation that the companies, they realize today that they need to do something with the climate transition, yes or yes. Otherwise, your product will not be well received, right? And at the end, my point is, when you have the compliance, when you have the reputation, and we need to start doing the climate actions, you start enjoying that, because we start seeing that that's the right thing to do. So I think that's a combination. It's still at the beginning, but I think that's what I can see.
Cool. So, Ciaran, let me ask you something. We've heard there is corporate demand for voluntary credits, and it's changing. Do you think that buyers are looking beyond simple offset and of long-term, high-quality partnerships to something that demonstrates a bit more real impact?
I think the due diligence processes are getting longer, more detailed. Buyers want more detail, because even inside companies, I've never actually gone to a company where they're buying voluntary in the hope they become compliant at some point, you know. So for me, it's mainly voluntary. But even inside companies, you have the sustainability department are into one side of why should we buy voluntary credits, and that's mainly that push for quality, longevity, and just making sure that their reputation is covered on it. Whereas the finance department, the CFO, is more like, you know, it's not like book this as an asset. But I think when you can combine them elements, as as Anta's spoken about with Northern Trust, it's given more opportunities. But I'd say, you know, I'd agree with Anthony a lot on what he said. So co-benefits will help a lot. Maybe not in your final decision, but certainly getting you in the room, keeping the conversation going and giving you that opportunity and strong co-benefits.
Okay, and from your perspective, and I know, because I know a bit about some of your projects, but how do you think that these carbon projects can deliver those additional benefits, supporting local communities, conservation?
They have to be included. You cannot carry out a project in Amazonas without the buy-in from local communities. It's just, it would be virtually impossible. I mean, the Turkana project is 9 times the size of Greater London. There's 10,700 people live in over 100 communities in it. You know, without their buy-in, you'll go nowhere. But once you get that buy-in, it's amazing what you can achieve. It's amazing the help, the cooperation that you'll get through a project. So that was always our main focus. Like, what can we do for you? Not, we don't want you to do this or we don't want you to do that. So we took a totally changed approach. For 2 years, we listened to people, we sat, we listened. What are the difficulties you're facing? And then go back with solutions that again related back like stingless bees. People have forgotten about them for hundreds of years, and it's absolutely gone nuclear. I always say we'd be threatening Manuka honey in a couple of years, you know, because it's something that's simple, that generates a great extra income for smallholders, and it's great for the biodiversity. So there's all of these great opportunities you get by including communities, by bringing them into the conversation. And really following their lead. They know more about the Amazon than we do, no matter what satellite systems we have or anything else.
Yeah.
So,
Henry, with your financial markets hat on, do you see, I mean, where do you see the co-benefits?
I'm going to take a slightly more cynical view, which is the co-benefits are wonderful, but they are currently not really being priced in my opinion, at all. Which is a problem, because ultimately you can argue that a carbon credit is there for the carbon, but you could also argue that the asset is actually the co-benefit and the carbon is an added a nice add-on. But carbon is the thing you can measure. So ultimately, if you have a virtue signaling buyer that is really detailed on the diligence and wants to look at the co-benefits, that's wonderful. But I would say most of the demand still comes from the perspective of what is the lowest priced asset we can get that ticks the box that we need to tick. And the problem with that is the lowest priced asset is probably the one that doesn't give as much back to the community because it's the cheapest to deliver. From a financing side, again, slightly cynical, but nobody cares. If I'm a lender or a financer and I see there's an offtake from a big offtaker, I'm not going to dig into the diligence on how good quality the co-benefits that sit behind that asset are, because ultimately I care about my returns. The co-benefits are nice to have, but they're certainly not front and center, which I don't know how to solve for that issue. I would love to have a nice solution, but I'm not sure there is necessarily one. I just think there needs to be more of a view that that element is semi-priced into carbon, or it becomes a sort of additional optionality. Otherwise, we're not going to get to a point where the best co-benefit projects are the ones that are funded.
I think it's we need to be careful, because we are here because of the climate change, and we are here because of how can we either avoid emissions of CO2, or how can we remove emissions from CO2. And this discussion about community, which is, I agree 200% that we need to have it, is really came from the developments of the Amazon or the forest maybe 20 years ago. That was a combination of nice projects with the community. But when you look at the end of the day, beyond the Amazon, you have projects, they are completely different around the globe. So when you have at the end of the day, what we do is we need to either avoid or remove one credit means 1 ton of CO2 equivalent. So that's what we all here should be aiming for. So that's what we should be aiming for. So because when you compare a project in Amazon that we have a lot of potential for the community, indigenous people, and so on, when you compare to something like, which is a BECCS project, which is, or a machine project that will suck the CO2 from atmosphere through a machine, what kind of community that's going to bring? And people are willing to pay much more money for that kind of project because we have a lot of investments, rather than paying the same amount for nature-based solutions, because they say that we need to attach that to community. So we need to be careful what you aim for, what we're looking at. I'm not saying that we should not do community, but I'm saying that, I mean, at the end of the day, we need to reduce emissions and we need to remove CO2 from the atmosphere.
I think the thing I'd say to that, maybe 2 things, is when you call a ton of carbon a carbon and it comes from avoided deforestation, reforestation, it doesn't matter. The security of that 1 ton that you bought and you've retired comes from that community backup. And it comes from that engagement. You may not price it in. You might think, look, a ton is a ton is a ton. But then why have REDD+? Why have ARR? Why have any of it? You know? So that's the only thing that I'd say, you know, in that case. And sometimes it's about worthwhile, you know, personally, and it's only a personal thing. I would rather engage with the community and have a long-term benefits than buy a machine that sucks carbon out of the earth. Forests have been doing it for thousands of years, you know, so.
I think that this
I'm
okay.
with you. I agree with you
No, I know
100%.
you are.
I'm just saying that we need to get these kind of projects to be priced as high as the other products that they don't do it.
Sure.
And the problem is that we're looking down these REDD+. Instead, what we need to do is look up for that.
Yeah,
I
agree.
I think that that's Henry's point. I mean, essentially by buy-in and the local communities, quality and integrity are built into the program. You know, there's a lot of commitment there, the people actually owning the project at a local level. Tell me something that, Alex, again, with your business and some of the exciting news that you're doing with regenerative agriculture, how does your business ensure that your carbon credits are genuinely additional, verifiable, and that they are durable?
Yeah, my business is specifically for ALM, which is agricultural land management. I like to call it regen agriculture. What we do is we do partnerships with farmers in Brazil that they are willing to start a regen agriculture. So it takes the process is very long. So a lot of questions talking about additionality and talk about quality. People think that quality of a carbon credit is something that you can get from the shelf. It is not like that. What is the quality? What's the integrity of a project for carbon credit? And I think we have very good examples today coming from Shell this morning, okay? Coming from Banco do Brasil, not this morning, this afternoon, both of them. Because if you are looking for a project that means quality, look who is behind this project. Because first thing that we need to do is you need to find one of the certification companies that the people will respect. We have the big fours. We have problems in the past, but I mean, everything is evolving. Things are being fixed. The things that they did not went well properly. But once you have it, we span from the day one that you talk to a farmer until that you register and verify your carbon credit. It takes 2 years of work on that one. So we asked about additionality. So when you go to a farmer, what is the additionality for a regen? You need to check if the land itself was a native forest in the last 10 years. If it was a native forest, either from the bioma Cerrado, Savannah, or in Amazonia, you cannot do the project itself. Second, you really need to have the kind of the additionality. The agriculture in Brazil is one of the most sophisticated agricultures in the world. But if you're doing something that you did in the past, you are not allowed to do it. You are not allowed to go to the project. So you need to verify the land, the forest, and the process goes with building the project design, and then you have all the audits, and then you have the certification. And after that, you need to sell the credits, right? And then you have the due diligence from the buyers, which you're gonna take another 12 months that you sell it. So the quality is, this is the quality, how you build this and how you associate it. That's the way that I see what's the quality of the project.
Cool. Which is basically the problem with carbon markets, is that what you just explained is so complex and they need to be simple and understandable and standardized. And until we get to that point, you're only going to get niche players that are able to afford to do the diligence on that, right? Or the buyers clubs, which are getting a bit better, which is helpful, but still we need to find a way to standardize or optimize for data flow and standardization.
I agree with you, and just picking the point of the standardization that we were discussing before. And when I see Northern Trust, what they're doing is a kind of making things standard as well. We need to standardize. I mean, there are two types of voluntary carbon credits: avoidance and removals. Itself is already a kind of ways of putting one kind of standard. So for me, at the end of the day, 1 ton is 1 ton. So if you want to buy a credit, which is avoidance, you have several kinds of projects that you're gonna go there. Normally they are cheaper than removals. So you have projects for avoidance, you go there, 1 ton is 1 ton, and you have the basis, and maybe you pay a little premium or a discount depending on the type of the project. So if you want a removal, you have several kinds of removals that they should be standardized in terms of price, because that's the only way that we're gonna create demand, right? That's the only way that we're gonna create demand, because the buyer, when they come, they know what they are buying. But if you go there, and if you go to a trading company and you list 200 types of projects, each one of them with a different kind of price, if the buyer will gonna get a little bit nervous about what should I buy, and some people are gonna say, give me the cheapest one, and that's not what we are here for. I mean, we want good quality of products.
Yeah. I mean, the quality is linked to integrity, to, I mean, you get back to that whole problem about, we've got a number of different verifying bodies, all of whom are not necessarily providing the same level of standardization. So do you see this as, until we get over that hump, do you see that as an obstacle to corporates investing in more voluntary carbon credits?
The number of registers.
The lack of standardization, and the fact that it's not generally, you're on one registry or you're on another, you're not necessarily able to move between registries.
Yeah, and the further problem with that is, if you are a lender or you are trying to buy credits, you might only have onboarded 2 of the 4 big registries, or 2 of 5, or 2 of 6, or however many there are now. Which means you can only buy from those registries. So even if you find a project that you like on a different registry, you actually still can't access it and buy it. I mean, I think the role of registries or registers, because I think the Northern Trust one is probably the only one that's an actual registry, will change. I think they will become standard setters. Because I think otherwise the infrastructure of the market won't actually function. Like, the limits that they set on what you're able to do with credits means that money can't really flow. You can't derivatize them, you can't securitize them, you can't create structures that allow clever bankers to make money. And the minute you do that, you can open up a bit more of a universe of pool of capital that will flow to those places. it is changing. It's changing very slowly. I think provided that people believe in the quality of the methodologies, it will be all right. And they do keep being updated all the time. There's a lot more scientific rigor than there used to be on all of them, which is helpful. Like the thing with the carbon markets, I guess we had that big hype cycle, then we had a crash, and now we have a market which feels like it's building pragmatically, like it's putting in place all the building blocks that need to be built in order for a market to actually function. But it's just much, much slower than people expected. So I don't think there will necessarily be cross-registry standardization, but I think provided that people believe in the quality of the underlying methodologies, it should be all right. I mean, I don't know, Ciaran, what your view is on like selling credits, given that you're the only one that has actually experience in that.
I think everybody had a time, like you said, to take a breath after that big hype. What was it, 21?
Yeah.
Now everything was great and wonderful, you know. But since then, we've all had a little bit of time to take a breath and have a look at where we're going, us as developers, as much as anything else. And I suppose going back to the question is the quality of the credit, the quality of the removal or whatever it is. For a long time, the voluntary carbon market, including the standards, left behind technologies that were there. They were very obvious that they could improve that. And we went to geospatial 10 years ago. We started to work with the Brazilian system PRODES, which was brilliant. It gave us very accurate deforestation data. We went to the European Space Agency, and it's all open source. So it's affordable. But that's just giving you data. How does that data relate to the carbon, that 1 ton of carbon that you were talking about? So again, we had to look at developing risk maps and bringing risk maps into this. So the risk map is saying this based on this data. And I think as we move forward, it would be helpful, because I know Vera have just kind of started the idea of risk map and geospatial. Personally, it's been about for 15, 20 years, you know, so I think they could definitely improve. That would improve how they're judging a project, because I don't think a standard should just look at the verification report. I think they should have their own ability as well to look at a project and say, actually, it is meeting us, and we have our own ability, at least on a very basic level, to check the data that's coming out of it. So it definitely, that's changed it a lot for us. In some ways, it's actually, instead of shortening the process of getting to the sale, it's added to it, because now everybody wants to know more about the data. How do you get the data? Where does it come from? Who audited the data? So
we're moving on to technology now, which is another area that I want to cover.
Yeah.
I mean, you're obviously utilizing technology. Technology seems to be playing, satellite imagery of your projects, huge projects. I mean, the only way you can see them.
You couldn't see them any other way. No.
I mean, do you also see there's a lot to talk about blockchain within the transaction process. Do you see a role for AI? Where do you see technology being deployed in order to hopefully bring in more confidence into the market, a degree of standardization, whatever you want?
It could depend on type of project by project. We talk a lot about geospatial technology. It might work better for REDD+, okay? Because you're gonna count. You're going to quantify your carbon through the satellites and peaks and the modeling about that. When you look at what I'm doing or in other things, satellite will not, you can use satellite as a tool to help you to monitor, but there is no technology good enough yet with the scientific background to prove that you're going to go satellite and get the carbon in the soil and quantify that. So I think that we need to be careful that we don't try to run on technology before we really ensure that everybody's comfortable with the methodology itself. That we see a lot of criticisms about the certifiers, the methodologies, but the big fours, they've been there for, don't get me wrong, I've been suffering with the the certifier for a long time because it's very bureaucratic.
And costly.
Costly. No, the certification is not costly itself because you pay a fee. What costs you is to do the project itself. But that's the way, because people say, oh, but we need quality, we need integrity, we need to make sure so we don't. So that's the way that you build it quality. So when you see, again, sorry, because Banco Brazil is here, Shell is here as well. When you see what Shell is investing in the voluntary carbon market worldwide, what Banco do Brasil is doing that, their team, they know deeply about all the methodologies. So they trust on that one. So we need to build that trust, make people comfortable with that. We standardize that, we say that that's good, and then we go beyond that for more technology. I think the end of the supply chain, which Northern Trust brought here today, is a fantastic place about technology. So once you have the credit, you have the supply chain, the blockchain, whatever it is, so you can secure quality for that. But during the projects, let's be careful because I mean we're still building this market. So if you bring too much technology right now, people are going to start asking if that technology is good, if there is science, because all the methodologies must be scientific proven. We talk a lot about methodology. It takes 4, 5, 6 years for a certification company to prepare a single methodology. It took 5 years for Verra. There are only one ALM methodology approved worldwide, which is from Verra. There are 2 others in the US, from CAR and ACR, but they don't go beyond US. So why? Because it takes time. Verra is not writing the methodology. Verra will bring stakeholders from academy, from science, from companies to write this. It goes to public audition and 3 or 4 times. And once it's approved, this is launched, this certification. It can improve, yes. It's a continuous improvement, but instead of trying to build everything back from scratch, we need to fix what we have today.
Any comments on that? Yeah. Okay, let's move on. I mean, we've been talking about the global market and all its issues and opportunities. Let's emphasize the opportunities. How can Brazil position itself as a global leader? We've heard a lot of stories about the size, the size of Brazil, the opportunities that size represents. But how can they position itself in the run up to COP30? How can it position itself as a global leader in supplying carbon credits?
I can give that a go. I mean, Brazil is, every bank that we speak to that is looking at funding projects cites Brazil as being one of their target jurisdictions. Okay. Which is great. And it's great that they say it. It's not so great that they're not actually doing it. But that's a different question. The thing that Brazil have done, I think, very well is the structure that sits behind the policy frameworks for carbon markets in Brazil is well thought out. It exists. The policies are there. The cap and trade mechanism is coming in. Fine, it might take a bit of time, but it is very focused on making the carbon markets work and doing everything it can internally to ensure that as a lender or as a financer, you are not worried that Brazil is going to go back on its promises and say, well, actually, you know what, we don't care about the carbon markets anymore, because it's written into law. And ultimately, again, being slightly cynical, if you are a banker or a financer, all you care about is downside risk protection, really. And if that is written into law, and there is a rule of law which is operational in that country, then you have a mechanism, whether you will or won't enforce it, you have a mechanism to claim back some of your assets' value in the event that something goes wrong. And so Brazil have done a very good job of setting themselves up for a good underlying framework, foundation, and clearly if you're talking about virtue signaling and reputational risk and trying to be the front page of the FT, then doing something in Brazil when copper's in Brazil is a helpful sort of Venn diagram crossover.
Cool.
I couldn't add much to what sorry, Henry just said. I think Brazil got it just right. They didn't rush in. They didn't want to be the first with legislation. They didn't want to be first with the trading markets. They actually took their time, and I think they looked at other markets and learned a lot from it, and how they integrated and left the pathway for voluntary as well as mandatory. So I thought they did a great job. Did it take too long? Of course, you're impatient. You know, you want things to move on. You want it tomorrow, but that's not the way Brazil works. You know, but I think they actually got it right.
Cool. Okay, great. Look, we could. This is a fascinating subject. Certainly, it is to me. But we could carry on talking about it for hours. We do have Ken Rivlin, who's board member and global partner at A&O Shearman, who is due to join us about now. But I want you to have an opportunity to ask these guys your questions. So please fire away with your questions. If we've got anybody who's got any questions that they'd like to pose to us before we go onwards. And
Don't encourage them, Simon.
yeah, that's okay. That's cool. Obviously, it's a definitive conversation. There's lots of opportunities afterwards, because what we're going to do now is, guys, I'm going to thank you very much for your participation in this panel. It's been really enlightening. But what we're going to do is we're going to move over to Ken. Ken's going to give us a talk to us, and then essentially we're going to be wrapping up, and then we have a networking session. These guys are, I'm sure, all going to be staying here, and that will be your opportunity to talk to them and to ask them some questions when perhaps you don't feel quite so much under the spotlight. Okay. So if that's okay. And the technology, I can see Ken is waiting for us. So let me introduce you to Ken. Ken Rivlin is the board member and a global partner at A&O Shearman, responsible for the environmental practice. I've been talking to Ken over the past couple of weeks. He's always flying between different places. He's a very busy guy, so we're very, very pleased and privileged that he's managed to squeeze us into his schedule. And it's also quite early in the morning on Friday, and I know that he got back from traveling late last night, so he's gone out of his way. So if the technology is okay, I'm going to hand you over to Ken to give us your address. Hi, Ken. How are you?
Hi, can you all hear me okay?
We can hear you very well, thank you.
Okay, great. So, I mean, you know, I should apologize for my excessive carbon emissions from air travel. So I don't know if that's the best introduction at a climate event, but I'm really delighted to be here. I'm honored to be asked to speak. I'm pleased to be hosting you, even though I'm only doing it electronically or virtually. And I'm really, you know, excited about some things you're talking about. And, you know, I'm especially pleased to see Henry up on the stage there. I know Kumo's doing some amazing things. So I'm glad you all got an opportunity to hear from him as well. I'll give you guys a little bit of a view on what we're seeing from the States. I will tell you that, you know, carbon trading is kind of near and dear to my heart. In 1990, just a few years after graduating from college, I was making coffee for the folks in the room who were negotiating the sulfur dioxide trading program, which was put in place with the amendments to the Clean Air Act. And so that was kind of really, I think, the world's first foray into emissions trading. And so even though my role was just kind of, you know, caffeinated or decaf, you know, I was in the room and I've been following trading ever since. When I joined A&O in 2003, I had the opportunity to draft the papers around the World Bank's Community Development Carbon Fund, which was their first fund. It was designed to extend the benefits of carbon finance to the poorest communities in developing countries. And so, you know, it's really been an issue that we've looked at. And at A&O, you know, as the carbon markets have kind of ebbed and flowed and evolved, you know, we spent a lot of time in the 2000s on emissions trading agreements and around EU ETS, and looking at interactions and connections between EU ETS and the then kind of growing and beginning of programs in the US. So this is an issue that's been really near and dear to my heart. And for that reason, and for many other reasons, which I suspect many of you share in the room, the most recent US and current US administration is a little bit less friendly to the environment, shall we say, and at least superficially less helpful to the prospects of emission trading and voluntary markets. But I think there are green shoots. I'm going to start with some of the parade of horribles around what's happening, but then hopefully end with some positives. And I do that knowing that I'm all that stands between you and cocktails and some food. So I'm going to try to be quick and crisp. So, what has Trump done? I mean, as you may have heard at the UN last week, he called climate change the greatest con job ever perpetrated. He's canceled billions of dollars of clean energy projects. He's taken the step of removing the words climate change and green from US government websites, withdrew from Paris, cutting climate research. A few weeks ago, proposed to end the US greenhouse gas reporting program, which, as some of you may know, is the program that provides for facilities that generate 25,000 metric tons or more in a year to be reporting on their emissions. And it's kind of an essential source of carbon data in the US and globally. And if things go as we expect, that rule will be gutted. So that's just some of the range of things that are happening from Trump. The other thing that I guess I would ask you to read, just so you see it, was the executive order that came out on April 8th, which is the Protecting American Energy from State Overreach executive order. It talks about the U.S. commitment to American energy, to removing illegal impediments to oil and gas production. And it particularly criticizes California, and we'll come back to California, for, quote, adopting impossible caps on carbon that force companies to buy or trade carbon credits, illegally. So, the Trump administration has clearly expressed hostility to credits. And none of this kind of seems positive, right? I mean, and my own view is that, at least in the short term, this feels like it would have some negative impact on future growth, at least in the US of carbon credits. There is some concern about whether it would impact CORSIA, the carbon offsetting scheme for international aviation. But so far the effects have been limited. And, I'm naturally an optimistic person, and for a whole bunch of reasons that I'll talk about right now, I'm pretty confident that not only will voluntary trading continue to grow, but it will prevail and it'll continue to be part of the solution. But make no mistake, there is significant negative policy headwinds in the US that could manifest not just in policy changes, but in litigation, and in also impacts on decision makers. I mean, I saw, and Emmy just mentioned the Standard Chartered deal that was announced, just recently. A number of other financial institutions, in fact, most of the big ones, are very, to the extent they have a US nexus, are really thinking hard about not necessarily what they do, but how they articulate it, and how that manifests, and how banks are kind of getting involved in and then proceeding with emissions credit type investments. I think it remains to be seen, and I'm hopeful, but I know that they are now. I mean, the legal departments and compliance teams at many of the financial institution clients of ours are really grappling with how to navigate things in this very difficult period of fragmentation of environmental and ESG rules. One kind of interesting thing, and I don't know if any of you all saw this, but the U.S. General Accounting Office came out with a report on emissions credit and voluntary trading in August. And so, this is the kind of thing that was getting shut down by the Trump administration. The results of this and the conclusions in this GAO report, and Simon, I'm happy to send links to all this stuff for folks in the audience, afterwards, if that's helpful and if there's interest. But one, it was a little surprising it came out. And two, it does provide a bit of a pathway for thinking about what's going to happen. I mean, it wasn't an overly conclusive report. It just said that the federal government has had a limited role in the US in voluntary carbon markets, and it summarizes some of those impacts, talks about how some federal agencies have have supported the growth of carbon markets, and in particular, Department of Energy, EPA, Department of Interior, and a number of the projects that have came out during the Biden administration and the Obama administration before. But then it notes, and I quote, "These efforts could change as government policies evolve," which was a subtle, surprisingly, and I say this as an American, since we're not that subtle, surprisingly subtle comment, which may be implying, that things are going to completely change. And I suspect, although I haven't spoken to any of the authors, that they were surprised that they got this out. But there were a few substantive comments in the report that I think won't come as any surprise, but are worth just keeping in mind as we think about the growth of the market. And, one is just the summary of challenges that we face, which are, how we deal with additionality and overcrediting, how we affirm permanence, how we deal with asymmetric information from the producers or the credits to those who are buying them. And then other issues that are really not mentioned in the report, such as market fragmentation, the need for third-party verification. All those things are things I think we need to continue focusing on as we're trying to continue to build and grow this market. And there are a number of folks in the room who have solutions on a lot of these things. And I think we're getting there, but the perception that we're not quite there yet can be a limiting factor. The other things that they talk about in this report, which again, I will send a link to Simon to share with all of you, they talk about standardizing contracts, and that's across jurisdiction, promoting transparency, figuring out the best ways to counter fraud. And, one of the other things, Simon, that I'll load up for you is, one of the recent climate-related fraud actions that the US federal government took. That's something that I might expect more from the Trump administration, given that they've moved all their environmental enforcement personnel away from enforcing violations of environmental laws. Other steps kind of explicitly to protect consumers, and other approaches to kind of just otherwise more generally regulate the consistency and quality of credits. So, there are a range of questions like these that have been raised by state and federal legislators by government employees who are focused on these areas. I think looking at that report, which won't come as any surprise to anyone, is worth doing, because it just gives you a sense of where some of the folks are thinking about these issues now going forward. But, look, notwithstanding the negatives coming out of the Trump administration, there are real green shoots. There are well over 2,000 active projects in the US, 30% removals. There are 400 plus carbon dioxide removal developers working hard. There are a number of significant and stable top carbon buyers in the US, including Microsoft, Shell, Delta, Chevron. I mean, notwithstanding the fact that a number of companies are pulling back from their explicit net zero commitments, they're still recognized, particularly those who have exposure outside the US, that they need to continue to take steps. There's also a recognition that this administration won't be in power forever, that the pendulum's going to swing back. And so there still seems to be a consistent commitment. And I'm hopeful about that. I'd be interested to know, actually, as soon as I'm done in another couple minutes, whether the panel shares that optimism, but because I wasn't able to listen to the whole morning, but I am optimistic about that. I note that more than 70% of the Forbes 500 companies still invest in offsets. So we're seeing that. There's developments in tech. And again, Henry is kind of at the leading edge of that up on the stage. There is, when you look at AI, you look at blockchain, you look at increasing need or kind of desire to use offsets to offset scope 3 emissions. We're better on data. There's a whole host of reasons why some of the historical challenges that we faced on offsets can be kind of overcome or remedied. So I'm really optimistic about this, even though in the short term it's a problem. Let me turn just quickly to Brazil. So, as you all know, and I'm sure you talked about, there were a number of pretty exciting announcements in the last month, kind of around Climate Week, and in advance of the COP. So you have the California-Brazil Climate Pact, You have the government of Brazil announcing the $1 billion investment in the tropical forest facility. You have the new UAE deal with Brazil. I mean, these are just a few examples of what I see as real green shoots. I mean, it's coming. And even though Henry, again, Henry, I'm sorry to keep quoting you, but I heard you right at the end there and it kind of stuck with me. I know you have some skepticism about other financial institutions going forward, but the Standard Chartered deal, I think is positive. You know, now in my practice, I cover not just environment, but trade and tariffs. And so, you know, I know the US-Brazil tariff situation is not great at the moment, but I also view that as short term. You know, this administration is extremely transactional. There are going to be opportunities to kind of reinvest in the US. In fact, there's a bit of a double-edged approach that the US takes. On the one hand, very aggressive on some of these points, but on the other hand, the America First investment policy, which is also set out in another very beautiful, big, beautiful executive order, if you want to read it, is really looking to invite investment in the US. It's difficult to really overstate how significant that is. So there will be opportunities for, you know, Brazil investment in the US, for Brazil to invite investment from the US. But aside from that, and given that you're sitting in our offices in the UK, and I suspect many of you are from around the world, in addition to Brazil, I mean, there are opportunities for you now to do business outside of the US. I mean, you know, Europe is keen, the Middle East is keen, China is keen, and you know, that's a whole tricky issue that we could spend a whole day on in terms of how you navigate that with the complicated US-China relationship. But the fact of the matter is, you know, Brazil presents so much opportunity that there are going to be companies, financial institutions, and governments focused on investment in this area. So I see just a huge amount of opportunity there. And the last bit of opportunity I really am focused on is Brazil's chances in the World Cup in the US next year. I've got $100 down on that. And under the current odds, I think Brazil, Spain, and France are all top ranked, or the expectations are the highest for them. But if you put $100 down, you can get $600 back. And I think that's a pretty good deal. So that's where I am. And, you know, Simon, maybe just as a thank you for you, you know, asking me to join this panel, I'll put a bet down for you as well.
Well, thank you very much.
And on that, let me.
On England, though, Ken. Thank you.
Yeah. Okay. Well, fair enough. Yeah. I can understand that. I respect your allegiances. So look, let me stop there. I mean, I think the bottom line in all this is that from someone like me who's been practicing in the environment and climate pretty much my whole career, you know, I am overall optimistic in this market, but it's been a pretty awful time in the US in terms of looking at how we figure out how best to kind of maintain the gains on environmental policy and protection that we've achieved over the last 30, 40 years. I mean, the US environmental regime is really been impressive. It's had significant environmental impacts in the US on air, on water, on cleanup of contaminated lands. And so to see things kind of retreat in this area is really disappointing. But I'm optimistic that we'll be able to turn things around. And I think that, you know, voluntary carbon markets are part of that. And I'll end with that, just to say again, thank you for including me. Thank you for coming to our offices. It looks like it's a rare sunny day in London. Is that right?
No, sadly, it's pissing down with rain, as we say.
I'm sorry. It looks sunny from here. Well, in any event, enjoy the food.
Has been hitting us.
Well, enjoy the food, enjoy each other. And if you have any questions, you'd like to raise anything, I'm happy to discuss.
So thank you, Ken, and thank you very much for hosting us, albeit remotely. Your hospitality is exceptional, and we're very, very grateful to you on behalf of the Chamber of Commerce and all of us here. But let's open it up to some questions. Does anybody have any questions for Ken? I certainly do, Ken. I've got one. And the question that I have is in your globetrotting experience, what lessons do you think that Brazil can draw from the other jurisdictions that you're involved in that have successfully scaled voluntary carbon markets?
Well, let me respond first with a question. Which jurisdiction do you think has successfully scaled carbon markets?
That's a good question. Yeah, and that's yeah. Okay, from and again from the compliance point of view, perhaps you might put forwards Europe as certainly put in place some legislation, but the voluntary market is another question. You're quite right. You're quite right.
Yeah, no, fair enough. I mean, look, I suppose I'd say EU ETS is probably the model. I mean, you know, there are kind of really combination of decent rules, focus on pricing and focus on kind of the country by country, member state by member state, and emitter by emitter approach, which I think you need to have. It was, it is, you know, still, you know, it's impossible to not be a little bureaucratic heavy, and that's one of the main issues with carbon regulation generally, balancing integrity of the system and integrity of the credits with the costs of assuring them, and the kind of cost and complication that comes from a major government program. So, I mean, honestly, I don't think anyone's done it right. And, you know, I'm you know, I don't know, a free market environmentalist. I mean, I think if we could find a way to do it as cheaply and possible, as with as little regulation as possible, that would be the best way to come at getting an efficient market. And what I'm hopeful is that combination of technology and good data that we all agree is accurate and correct, and some third-party assurance of that credits are valid and enforceable and permanent. I mean, those are the kinds of things that you need, in the same way that we all have trust in, to varying degrees maybe, in the dollar, in the euro, in other currencies. And so, you know, the goal, I think, is to get a credit to be, and we're there to a degree, but maybe not completely, to get to the point where, you know, we have the same faith in the credit that we have in the currency that's either that we're paying on with our phone or with hard currency. And I do think, I mean, look, my other view on that, Simon, and maybe this is kind of slightly repeating what I'm saying, but, you know, there's always a balance between, you know, efficiency and environmental protection. And I'd rather we spend as much energy as we could on reducing carbon and achieving other environmental benefits, rather than creating new offices with new paper and new salaries and new meetings and you know, new people who are in charge of their little anthill. And, you know, I think there's a balance on all that. You know, from an American standpoint, you know, Europe is viewed, especially the European Commission on Environment, is viewed as being a little bit overly bureaucratic on how things are handled. I know that's reflected in some of the discussions going on now around the omnibus and some of the initial reactions to things like CSDDD and CSRD, et cetera. So I think some kind of balance on that is something that we need, while still achieving the goals that we've talked about in terms of kind of improving the viability and marketability of offsets. So I guess to answer your question, I'm not sure anyone's done it great. I think the best thing Brazil can do is well, I mean, what they're doing. I mean, negotiating these other agreements, the ones with UAE, with California, with Standard Chartered, you know, ensuring that there's kind of strong rule of law, doing what it can to have environmental enforcement personnel and other personnel kind of trained and ready to kind of assure the viability of projects, to assure, for example, in a forestation project, that the forest remains. I mean, there's all sorts of things like that Brazil can do to ensure that it's continued to be viewed as a safe pair of hands, as a partner. And I think it can do it and does do that. But I mean, if you ask me, I think that's the best thing. In fact, you know, in many ways, in most ways, maybe Brazil is probably a better long-term partner than the U.S., given the fickleness of our policy in this area. So, I mean, if there can be also certainty for the long term, I mean, what my clients look for, financial institutions and corporates, is just as much long-term certainty as there can be so that they can plan, so they understand what the rules of the road are going to be. So if Brazil can do that in this area, then I think the benefits will come back to them.
Great. Okay, Ken, I really appreciate, I don't think there are any other questions here, but we do really appreciate your taking time out to join us today and also for hosting us again. So, and thank you very much for the insights that you provided. And it's been really insightful hearing from you. Thank you very much.
It's really my pleasure, and enjoy the rest of your day. I'm so sorry I couldn't be there in person, and have a great rest of your day.
Great stuff. Thank you, Ken.
So long. Bye-bye.
Okay, great. Okay, thank you all. So this is the end. It's a horrible Friday, but it's the end of a long week. This past week has been Brazil Investment Week, and many of you have been through. Started off with us on Monday and been through. So this is the culminating event in Brazil Investment Week, and we very much appreciate your involvement. Very much appreciate the hosting from A&O Shearman, although Ken was unable to be here in person, but certainly the team have been looking after us fabulously, and so we're very grateful to Hannah and her team here for hosting us, and Marianne, of course, who was so instrumental and so helpful in putting this together. I'm also extremely grateful to my co-host, Daniela. Thank you very much, Daniela, for your help in putting this together. And as always, to the Chamber of Commerce, to Vera for being here and for your continued support, Vera. And also to Lena, who provides a lot of hands-on assistance, so it's really appreciated. A word to my to all of you as well. Thank you for being here, but also mostly to thank our hosts. Our speakers. Malik, who joined us from I think he's in the Middle East, wasn't he? He was in Dubai. Yeah, in Dubai. So Malik joined us remotely. Ken joined us from New York, and Thiago's here in person, and Anthony was here in person. These guys have come. All of you, I know how much time you give up in order to join and to share your experiences. So it's very much appreciated. I'm very grateful to you all. So that's it, really. I mean, I think it's very timely. Brazil Investment Week, our presentation here, COP30 coming up, Brazil, president of the BRICS, all sorts of exciting things happen. Do keep an eye on everything that goes on in Brazil, everything that goes on between UK and Europe and Brazil in terms of bilateral relationships. And thank you all very much for your time coming here today. And hopefully I haven't forgotten it. It's always try not to forget anybody, but if I have, my apologies. But I'm very grateful to you all, and it's been a great event. So thank you all. Thank you. And now we have a networking opportunity, which is largely what it's all about. Please, mingle and ask questions, and let's develop some working relationships and some business relationships. So thanks. Cool.